And you guys can do the math on 6,000 ounces a month of production. We're generating 14 million of cash, 13 million of cash. At some point we potentially hope to be looking at buybacks of shares because we think we are substantially undervalued. Personally, would think that we should be multiples of where we are today, and that doesn't even include the value that we have for Quebec. Our iron ore asset, we had a very, very strong gold asset in Brazil that we recently sold for 80 million Canadian, or about 60 million US, of which we still are owed about 45 million US, or about 60 million Canadian.
All right, today we're having a discussion with Mark Brennan, who's the CEO of Cerrado Gold, a gold mining company that has a lot going on for itself. Three main things to focus on. First up, an operational, low-cost, mid-sized gold mine. You can think along the figures of roughly 50,000 ounces and a cost of around $1,150 all in, while the current gold price is well above $2,500 an ounce. Up second, we have an iron ore project that might provide a lot of upside in the future to investors. And third up, we have an asset that was recently sold for over 60 million US dollars. Now, all of that is wrapped up in a company that's worth less than 25 million Canadian dollars on the stock market today. So we believe that's quite an interesting value proposition. And we have Mark on the show to pick his brain on that. But first, Mark, perhaps we can start off with who are you and what kind of track record are we looking at? What have you done in the past?
Well, fantastic. Thank you very much, and thank you for having me. We have a team of individuals have built and sold and developed mines. Historically, we've been very good at finding properties, world-class properties like Jacobina, which is now Pan American Silver's major asset in South America. We developed that asset. We took it from a very small asset, in terms of an asset that was cannibalized and non-operating. We sold it to Yamana for $600 million in 2006. We went on and built a company called Largo, which is has one of the cheapest vanadium producers in the world. We went on and restructured a company called Sierra Metals. And then we're now building Cerrado. And as you mentioned, we had a very, very strong gold asset in Brazil that we recently sold for 80 million Canadian, or about 60 million US, of which we still are owed about 45 million US, or about 60 million Canadian. So those funds will come within the next 6 to 12 months. And then on top of that, as you mentioned, we've got a very exciting project in Quebec that we like a lot. We've always liked it a lot. And we think we can use the funding that we have from the sale of our Brazilian asset to really drive that project. So basically, you've got a group of guys who are market oriented, but at the same point, very much focused on driving assets and building assets.
And Mark, who are the team members that you are surrounding yourself with to build Cerrado Gold into a success story?
Well, we have a strong group of operators. That's basically what we started with Kurt Mencken and others. We now have a strong group of in Quebec. We've got what we believe are two of the most solid guys who've built and been involved with most iron ore projects in Quebec. In Argentina, it's being led right now by the chief operating officer that I had at Largo Resources. Largo was a very, very complex operation. Producing vanadium is you're taking a rock, you're converting it into a liquid, and then back to a rock again. Where with regard to that was a very successful operation. Casper is driving that operation. He's South African, lots of experience, and a very renowned operator. So he's currently running our operations in Argentina. And we have, as I mentioned, very strong operators in Quebec who've been pretty much involved with Champion from its earliest stages with most other iron ore projects in Quebec. So on the operator side, we're strong, and then on the corporate side, we've got Cliff Hale Saunders, who's the next analyst at CIBC, RBC, TD, Cormark, which is where I met him with Largo, covering Largo. We have David Ball, who's a longtime Macquarie individual who knows the markets and the mining sector extremely well. He's a second-generation mining individual. We've got just a plethora of very, very strong guys.
Excellent. Always good to hear more about the team behind the company. And those are a lot of names that the viewers at home can Google to research more about. Perhaps we can dive into your operational gold mining assets in Argentina. It is currently operational, it's profitable, it is a heap leach project. Perhaps you can explain a bit more, what are we looking at and what is the production profile?
Sure. Well, basically, we the production profile, we acquired this asset in 2020. The production has gone from basically 22,000 ounces when we acquired it. We've taken it up to about 50 to 60,000 ounces. Right now, we believe that that's kind of the optimal kind of production level that mine should be operating at. But remember, we acquired this mine in 2020. A week later, we had COVID. So we had some very, very rigorous conditions imposed upon us by the Argentinian government, by COVID in general, from 2020 to 2023. So what we've been doing for the last couple of years is really focusing on growing, on stabilizing that operation, and then now we're really focused on growing that operation. We have 333,000 hectares of land there. That's the size of Rhode Island. I mean, it's a pretty big piece of land. On top of that, we haven't done a lot of exploration in the last 4 years because we've been really focused on development, and now we're really aggressively focusing on exploration. We have projects all around us. We have the Anglo Gold Cerro Vanguardia project that has produced 8 million ounces to date. We've got Cerro Moro, which is now Pan American, that's produced probably about 2 or 3 million ounces to date, with more in the bag. We have Cerro Negro, which is Newmont, with about 8 million ounces. So we're in a gold belt, which is a classic epithermal system, which similar to Nevada, which has got lots of potential for big elephant hunting. And what we need now is just get out there and go out and explore. And the sale again of our Brazilian asset wasn't our first choice, but now we have plenty of cash to go out and really drive the assets that we have.
Yeah, that's great. Great to hear that you actually have the liquidity to move those projects further. And at the start of August, you published a PEA. Could you maybe share us the highlights of that updated PEA for the Argentina projects?
Yeah, sure. And that project should be that PEA should be published by Friday. So that'll go into CDR by Friday. We're just working on the final touches. But what we're looking on average is about a 4.5-year mine life, 55,000 ounces per year, running at a cost, as you mentioned, of just shy of $1,200 all in. Basically, should generate something in the region of about 50 million at 2,200 gold. Should generate about 50 million of cash flow and about 25 million of free cash. So probably around these prices, we're running north of 30 million of free cash. That's a nice place to be in for the next 4 or 5 years. We will use this cash to go out and really drive our exploration, grow our resources. At the property, we have lots of targets, underground targets. Most mines, Cerro Vanguardia, Cerro Moro, Cerro Negro, they started off as open pit operations, then they went underground. That's what we are now doing. We're now focusing on going underground and looking at operations that'll have far more resources and far more meat on the resources for a longer term perspective.
Yeah, we would love to talk a bit more about your exploration potential in just a second. Perhaps we can dive into the free cash flows that you actually predict to make out of this project compared to your current market cap, because you are only worth 25 million Canadian dollars in the stock market, correct?
We are. I mean, it's I think the stock markets right now, and probably for my view, and if people know me and have spoken with me, probably for the last couple of years, the markets have really been in a strange place. It's really been lots of anomalies out there. The markets have not been reliable as they have been historically. I've been in this business for quite a while, and again, when in the past, when you saw certain parameters achieved, you could expect that you would get certain types of opportunities. That's no longer the case. So if you look at our market cap, again, 25 million market cap. Well, if you look at our NPV on our mine life that we have in Argentina right now, it's 111 million. If you look at reducing that, the debt that we have on board, on the back of that, it brings it down to about 55 million. That we should at least get on a producing asset. We should be somewhere in the region of at least 3/4 to 0.8% of that NPV. So that would give you an easy $50 million, I think, on market valuation alone at $2,500 gold. On top of that, we're owed $45 million US. The first 30 million of that so it should come by the end of March. and then the next 15 million will come within about 12 to 18 months after that. So we are going to be very, very solidly liquid and in a strong financial position to go out and do things that maybe we couldn't have done before. So we're pretty excited by that. But again, if you look at the combination of our cash position, our value on an NPV basis on the ongoing asset, on those alone, I personally would think that we should be multiples of where we are today. And that doesn't even include the value that we have for Quebec, our iron ore asset that we think is a phenomenal asset. And we will now start we're moving into a feasibility study that we can publish in the next year. We expect to publish that by the end of next year. And we see that asset as having the ability to generate somewhere in the region of 350 million of free cash a year, a cash flow a year, 250 million of free cash. We already have TD Bank, supported by the UK government, putting up 70% of the capital requirement for that project. So we potentially could come out of this very, very nicely. But you know what? Where we are right now, we're going to rely on our cash to drive the operations. We're not going to rely on the markets. At some point, we potentially hope to be looking at buybacks of shares because we think we are substantially undervalued. And those are things that we're looking at right now.
Mark, you just took out like 5 of my questions. That was a great answer, super comprehensive and super condensed. So thank you for your answer there. Perhaps we can talk about that counterparty of that $45 million in cash that you're still waiting for. Of course, for that asset sale, you are getting that in cash, if I'm correct. Perhaps we can talk about who that is and what is like kind of the credit worthiness of that counterparty.
Sure. Well, the counterparty is Hochschild Mining PLC and one of their subsidiaries. Hochschild Mining have been mining for the last 100 years. They've got $1.5 billion sterling market cap right now. Basically they have been very much focused on, for the last 75 years, they've been very much focused on Peru. That's where the family come from, the Hochschild family come from. The patriarch is a multi-billionaire. So they're a very stable, very clever, a very philanthropic, good a good purveyor, in our view, of our asset. They'll drive that asset. They'll bring it into production very nicely, and they'll hopefully show to the world what we saw in that asset and the value of that asset. But on top of that, again, they're cash rich. They've just moved into Brazil. They just finished a project where they're now moving into commercial production on that asset. It's very close to our asset, and so they'll be ready in the near term to go in and start developing our asset. Is our expectation. But in terms of their creditworthiness, they have more than enough cash on their balance sheet. They have more than enough cash available to them through their liquidity to provide us the cash that is due to us. So I think if you look at them, they're generating a lot of cash. I think if you look at their creditworthiness, you'd say they're pretty solid.
All right, great counter. Thank you there, Mark. Perhaps we can now talk about your iron ore project. You already started hinting at it. Could you give us a short overview? What is the project all about? What stage is it currently at? And what are the timelines?
Yeah, I mean, we finished a PEA on that asset in 2022, and we love this asset. This is almost been one of our favorite assets from the perspective that it is a really nice, strong asset in the sense it's a very simple asset. We're located in Chibougamau in Quebec. Chibougamau used to be a historical gold mining camp. We're about 25 kilometers from the town of about 7,000 people. Our deposit starts at surface. The strip ratio is 0, is less than 1 in the first early years. The reality is that this is going to be a mine. It's going to be a fantastic mine. With low cost because we have infrastructure all over the place. So what's important in iron ore projects, as I'm sure you're well aware, is location. And where we are with this is we have the ability for people to drive out to the camp, to the mine. It's open pit. It's a very homogeneous deposit at surface. We have 1.1 billion tons currently. That's supporting a 21-year mine life at 5 million tons per year. That only represents 30% of that 1.1 billion tons. So we can see an expansion, we can see an extension of mine life very simply. But what the important thing here is that we are very close to infrastructure. So we're probably something in the region of about 15 kilometers away from railway. We have a railway which is owned by the Canadian government, which means that they have to give access to everybody. On top of that, what you're looking at is that goes down to the Port of Saguenay. The Port of Saguenay, which is about 300 kilometers, Port of Saguenay basically have been dying for many customers to come to the port. It's a deep sea port, open all year. The government of Canada and Quebec have put in about $70 million into the port in the last few years. They're going to expand that as well. So we would be an ideal customer for them. So what we're looking at is great infrastructure, which means we're not spending $1 billion on roads, $1 billion on railway, on a port. It's there. It's all there for us. And that's one of the greatest appeals. Now, the second thing is that I mentioned the deposit itself. It's very homogeneous. It's a high-grade deposit. So what we're looking at is we've been working for the last 6 months on the metallurgy and the characteristics of the deposit. And what we see there, it's called a DRI, or direct reduction induction material, which means that it's the highest quality iron ore that you can get. It's 67%. So when you see iron ore quoted at $92, we actually get about a $20 or $30 premium on top of that for this DRI material. So it's the highest quality you get. If the iron ore industry grows, then that's great. If the iron ore industry doesn't grow, it doesn't matter, because this type of material, this DRI material, is actually biting into the existing iron ore. So when you see people like Vale and BHP selling iron ore out of Australia and Brazil, they're selling a 58% iron ore. Now, when you see a quote, it's 62%. We're shipping, we intend to ship between 65 and 67%, which means that they're having a lot less footprint in terms of hydrocarbons, and so all the producers of iron ore, they're moving away from conventional iron ore to this higher grade material wherever they can get it. This product sells. So from that perspective, we're very excited. We'll do this feasibility study starting in October. It'll be completed by the end of next year. We will also continue with our permitting process that we've been working on. Quebec is a long permitting process. It's 3 years. That permitting process will be, at the end of next year, we'll have 1 more year to go. And we'll be very close to a construction decision. We've had a lot of interest from very, very senior companies that are household names that you would know in this project. We don't want to do anything right now until we're at a point where we can recognize the value that we believe this project deserves. But I think that this time next year, we'll be in a really good position to look at potentially working with major partners to bring this project to production. And I think that there's nothing out of the ordinary here. It's a very, very simple project, which is what you always want in the mining sector.
I think that was a great overview, Mark, and we could dedicate an entire video just to your iron ore business. I think it's highly interesting with the future upside, with the way the ore is constructed, the premium above iron spot. Definitely super interesting. You already started hinting at financing of this project. That is a bit in the future. You're first going to have to do a feasibility study. But do you have some visibility on how you're going to finance this? The PEA, I believe, said an initial capex estimated at $574 US.
So basically right now we have the support of the UK government, who are prepared to give us support for up to 70% of the capital requirements for this project. And TD have come in and said that they would like to be the lead arranger for that funding. They love this project. They want to be involved. So basically, if you look at, let's just use the 600 million. My guess is that 600 million will probably climb a little bit between now and the time the feasibility is completed. But let's say we use 600 million. That means basically we've got $420 million already supported by the TD Bank. On top of that, so then we'll need $180 million. I think between an offtake and between a stream on this project, we could probably bring this project to production on its own right. That may not be the route we go. I think we may look to a strategic partner to come in and to actually look at funding this project to the production stage, leaving us with a good and solid position in the asset.
Yeah, thank you, Mark. It sounds very comforting that you already have such partners in place for funding that project. Now going back to Argentina, I believe there is a very big upside there in the mine life. As you said, currently it's only at 4.5 years left. However, there has never been drilled deeper than 200 meters. Could you explain a bit about that possibility there?
Yeah, I think what's very interesting in Argentina is if you look at the history of the Desierto Massif, which is where we are. And again, this is a classic epithermal low sulfidation system, very, very similar to what you have in Nevada. And if you were in Nevada, you would have almost every inch of this place drilled. But because we're in a geographic location that nobody has really exposed in a big way, then there's lots and lots to be done. Now the belt actually, you started with Yamana moving in there. With Anglo moving there in the early 90s. They took about 10 years to get to 1 million ounces. And then from about 1995 to about 2005, and then between 2005 and 2010, they went from 1 million ounces to 8 million ounces. And how did they do that? They did that predominantly from going underground. They were operating it, they were mining it from surface, but then they obviously built their operations, they got to know the project, they built their cash position, and then they drilled aggressively underground. And so now you'll see that most of their operations are their production is coming from underground operations. The same thing in Cerro Moro with the guys at Yamana. They probably had a much more, because they saw the experience of, and they were cash rich when at the time it was owned by Yamana. Yamana were cash rich, and so they skipped a step and they went from underground. They were open pit for a little while, but they very aggressively went underground. And so from that perspective, they have a lot of mining, and a lot of production coming from underground. If you look at Cerro Negro, which is Newmont, Goldcorp became Newmont. That asset now has about 7-8 million ounces. The reality is that that's predominantly 3/4 of that is underground. So we have been focusing predominantly, exclusively on surface mining, but we have 3 areas where we see very, very good underground potential. The area that we mined for 3 or 4 years called Paloma, we have the sulfuro vein there that we know there's continuity. We know that there's additional ounces. We have additional ounces in our resource. The issue is that we could go in there tomorrow, but we would probably end up with an operation that breaks even. What we want to do is we want to see a little bit more drilling at surface, a little more cash in our bank, and then we will go underground. And we will go underground there, and so we'll continue to drill in the short term, but then we'll start to look at building an underground operation, and we'll drill from underground, because when you drill from underground, you generally get better results, it's cheaper, and you're not drilling as far. On top of that, what we're looking at is we're going to go to we've got 2 other areas that we see as highly likely that we'll see very substantive underground potential. And so those are new project areas for us that we've produced out of surface, and what we want to do is just get the continuity of surface into the underground. For example, at Paula Andrea, we had areas where I think there was one. We had something in the region of about 121 grams of material over 11 meters, and basically we mined that out of surface. But again, we believe that the source and the structure is showing us that it's most of the ore is below. So again, a little bit of money, and this is where Hot Shield will help us a lot. A little bit of money, $2,600 gold. We're building our own cash position now as it is. So these things are going to really help us to drive this operation that we have not been in a position to do before. I mean, quite honestly, I talked to our lawyers in Argentina, and last time I was there, my lawyer was saying, well, listen, everyone's amazed that you guys even survived. COVID was a tough time, and it's important to stress here, we've only been there for 4 years. And so we haven't, during a really, 3 years of very inhospitable mining, where you couldn't bring people across the provincial border, let alone the country border. I think the team there have done a great job, but I think we're right at the beginning. And, even if you would have spoken to me, 6 months ago, I would have told you this is a startup. even though we're producing 5 years, now we've got the PA in place. Okay, I can't call it a startup anymore. But at the same point, this is at the very early stages of its development.
Thank you, Mark, for that great overview. And again, we could spend an entire video just talking about the exploration potential. There's a lot of legs to stand on there. But I would like to transition actually to a different side of the equation, the financial side of the equation, your balance sheet. There's a couple of entries on that, on the current and the non-current side, that have to be paid on the short to medium term. Perhaps you can talk about that also in comparison to your cash flows.
Yeah, I think there's a few things to note there. One is we for example, we've got a couple of streams. One with Sprott. We have a number of streams in Brazil. We have a stream with Sprott. In Argentina, there were streams when we acquired the project, but we have with Sprott. The accounting for streams in these days is very complex. And so you'll see that our balance sheet, I think, is about 250 million in terms of its size. I think much of that is accounting, and so the way I look at it on an operating basis is this: I see us as a pretty clean balance sheet. We have a very clean balance sheet in Canada and operational and in the corporate side. In Argentina, we have operational debt of about $50 million. Now, $30 million of that went towards building a heap leach operation, this heap leach operation that we have. Another $10 million of that went to stripping the Calandria Norte, which is where we're mining right now, and we're deriving great profitability. So what we're looking at is, first of all, I'll talk about the $30 million. The $30 million of bank notes and bank debt, basically, we're looking to pay down a lot of that in the next 6 months. But we also, unique to Argentina, is that there's an ability to roll those over. Unlike if we were in Brazil or Canada, what we would have looked at is instead of getting $30 million in a 12-month note, we would have got that in a 24, 36 month note, 5-year note. In Argentina, they have these instruments that are wonderful in certain respects, but at the same point makes them short term. And so what we have to do is we have to roll over these notes every whenever they come due, which is on a monthly basis. We have different amounts that need to be rolled over or paid off. And again, my hope is that by the end of the first quarter, we're going to be in a position where we see a much dramatically reduced and clean balance sheet. And then by June, our expectation is that we will be cleaned out of our debt in Argentina. So debt is a big thing for us, and balance sheet health and is extremely important. We talk about it in every press release. We talk about it in every discussion that we have. But the cash flow, again, that we're seeing right now, we're looking today at probably anywhere between, depending on the month, about $6 to $8 million of OPEX. And you guys can do the math on 6,000 ounces a month of production, 5,000 ounces a month of production. We're generating 14 million of cash, 13 million of cash. So that strong gold price is really enabling us to reduce that debt pretty quickly. And that's something we want to get out of the way. And frankly, we want to do this without bringing in $30 million from Hochschild. That for us that's a bonus, and that's not necessarily money that we want to touch. In terms of we believe that Argentina is very strong and strong enough to actually come out of its own debt situation through its own operations.
Yeah, it makes complete sense. It sounds like you have enough growth opportunities with the iron ore business, also exploration at the gold business. It makes complete sense. I love that you're making a distinction between liabilities and debt, and you've already started hinting at it, but perhaps you can outline how much debt is actually in the Canadian business. We know 50 million in Argentina one. How much debt is there actually? Not necessarily liabilities, but just debt that needs to be repaid.
We have in Canada. In Canada, I think between all payables and payables, I would think would be something in the region of payables is less than $1 million. We have a note which is about $3 million. So that's probably about it. We do have a rolling facility for about $10 million, and that rolling facility, again, with the cash flow we're generating right now, basically what's happening there is every 6 months we roll that over, and that's something which is becoming less and less necessary for us. And so that's probably something that we'll see moving on as we get stronger financially. But I think that's the extent of our real debt position. And again, I think from that perspective, we're pretty healthy. The one thing I'll just add here is, just on Argentina, is they're moving very aggressively towards this moving away from currency controls, moving away from taxation in a big way for imports. I think if you've already seen groups like McEwen looking to invest a lot of money. You've seen BHP and Lundin coming in. I think once you see the removal of these currency controls, that I think will probably happen gradually over a period of the next 6 months. I think you're going to see a lot more people coming in. And the real important thing to note here is that everybody globally are looking for big assets. And the fact of the matter is, Argentina has been a country endowed with many, many resources, yet not ever really being fully exploited as a consequence of the fact that the government's policies and the government's fiscal policies have been very, very detrimental for investment. But I think that's going to change, and I think you're going to see a big movement of not only the lithium industry, but of the general mining sector moving into Argentina. That'll have some significant ramifications for everybody moving forward as well. So I think just to bear in mind that will have another significant impact in terms of the monetary value of Cerrado moving forward.
Great point to add, Mark. Thank you. Milei taking over in Argentina, that government definitely bearing its fruits already. Perhaps we can end off this interview actually talking about what are you most excited about heading in 2025 for Cerrado Gold?
Cash flow. I like cash flow. I like cash, and I like generating cash flow. And you kind of say, what have we been all about all our years? We like to generate cash. And we like to be in a position where we feel that we're good at mining. Every operation that we've built has stood the test of time. Jacobina, after 20 years later, still producing, still one of the best assets. Largo's Maracás asset, still one of the best assets, still producing. We turned around Yaracocha for Sierra Metals, still one of the best assets, a very good asset. So we find good assets. We want to be involved. What I want to see here is an entity that is just a locomotion for strong cash flow. And that's what we're going to be looking for. That's what excites me. I can see it coming, and I'm very excited by that.
Mark, thank you so much for your time. Thank you for that overview.
Stan, Lars, thank you very much for your time. Really appreciate it.